All right, guys, welcome to the Ultimate Advisors Resource Podcast. I'm Ken Fisher, and I would die and go to hell before I sold an annuity.
Would die and go to hell before I would sell
I'm just
an annuity.
joking. Chris thought that was funnier earlier, but actually, we're talking about the top annuities, top fixed annuities, and some of the options out there that we're seeing very popular, right, Chris?
That's right.
We had a lot of success with a few FIAs, and as always, MIGA rates are hot right now. So it is August the 2nd, 2025. And anyways, I'm Jordan Pence. I'm not actually Ken Fisher, and I will sell an annuity. And hopefully I don't go to hell, but I don't think I will. and anyways, so I've got Chris Workman here, our case design specialist. We at Advisors Resource, we help you write more life insurance and annuities. So I think we kick it off with MIGAs, right, Chris?
That's right.
All right. So out of all the companies we work with,
It's pretty easy.
who's the top one?
American National.
What do we got currently at American National?
Depends on what year you're looking at. Maddie, you want to advance that for us?
Well, before you get into that, let's talk about the one unique thing that they have with the MIGA, and that is their 6-year MIGA with the bonus.
Correct.
It's kind of weird. Can you describe it a little bit?
Let me take that from you. So with the 6-year product, like Jordan mentioned, there is a bonus. So if you're putting in 100,000, you get 9.55% in that first year.
So what do you get after that?
After that, you're getting 4.5%.
So that is on the 6-year, and that's probably a actual rate of return of 5.4 or something. 5 point.
Right around there.
Yeah, and if you do this, if you're 250 and above, how much is it?
250 and above, you're getting 9.7% the first year.
And 4.7.
Followed by 4.7.
That's really the only interesting MIGA thing that I've seen. I don't know about you.
That's, yeah.
I mean, American National has both the regular MIGA and the MIGA Max. Like MIGA Max gives you basically
15 basis points.
15 extra basis points. So on, a 5-year 250 plus, we're getting 555, 5.55.
Yeah.
The only difference is the liquidity features, right?
Correct.
Can't take anything out at all.
Can't take anything.
So, I think the comp is half on the Max.
Ronnie said differently. Our wholesaler did say differently.
Okay, maybe I'm mistaken.
I need to confirm that on the comp sheets because that doesn't sound right.
Well, regardless, the other version, the regular MIGA has the normal 10% free withdrawals and so forth.
Correct.
So other than that, I don't really think there's anything crazy on the MIGA side.
Not really.
The only thing that we can bring up is American National's, I think, RCA, which I think is actually a good competitor to a MIGA.
You're actually skipping ahead here.
Oh, you're going to get into it? All right, forget about that.
We're getting to that later.
More on that later. All right, so MIGA's very simple. I'm going to read. Maddie's got the rates up there. Like 3 years, we're getting over 5%. 5 years, we're getting what, 5.4, 5.55. 7 years, we're getting about 5.45 and 5.6.
Yep.
So that's, I don't know.
MIGAs are pretty straightforward.
Yeah.
There's not much to it.
For my buddy Scott out there, these are kind of like CDs, but they're tax deferred. So if you've got CDs, think of these as an alternative and more tax efficient. I mean, that's basically how I would be positioning them with your clients.
That's exactly what it is.
All right, let's move on to income.
Perfect. Is it? You're not sharing.
Keep going. Keep going.
Those are the 7s.
There we go.
There we go. Perfect.
Top income.
Income focused annuities, really, there's two options. You've got F&G, you've got Global Atlantic.
So to be clear, we're talking about lifetime income riders
Correct.
and the amount of income that you can get out of them.
Exactly.
So our top ones are going to be F and G, and I think almost if you, I mean, you could probably go down to B plus, and still F and G and Global Atlantic are going to be the top ones,
That's
right?
exactly right.
By the way, we only really represent A-rated companies.
Yes.
I think your E&O actually goes up if you're selling B-rated annuity companies, believe it or not.
Makes sense.
They'll ask you that, but as far as our income-focused annuities go, where you're just talking about a guaranteed income, it's F&G Global Atlantic. Now, is there anything like, I mean, some of these have these sort of like doubler features and things like that,
Mhm.
but other than that, I don't think there's anything really too innovative or things that you really need to think about with
Not
these.
particularly. Corebridge is another carrier that we have. They show up every now and then. As far as the income focused annuities, they do have the doubler, like you mentioned. They have the depleted benefits where you can accelerate a portion of that income. But apart from them, there's really nothing out there.
Yeah, I think really it's all about when do you want the income and the ages of the people.
Exactly.
I mean, it's almost like term shopping.
Even with these two, anyone roughly under age 71, I would say, F&G is going to look the best. If you're over 71, if you want immediate income, Global Atlantic's probably going to be the top option.
Now, I will say the only downside with that F&G product is it is only income. Like
Correct.
you're not, I think the cap is like 3%.
Yeah,
If you change your mind, you're not going to have any growth on it at all.
there's nothing.
Yeah. So you better turn on the income on that product.
Yes,
I mean, that's the only other thing that you need to really think about before you do one of these is what is the purpose? Are you going to take income on it? If you're going to take income on it, it's pretty freaking strong.
it's very strong.
They've got that sales piece where it's like a 60-year-old and we'll add this, maybe we'll add this on our download
Yeah,
and as well as the MIGA sheets. But I love this flyer from F&G. It's like 60-year-old puts in 100 grand. If they wait 5 years, they get almost 11,000
yeah,
for life guaranteed.
yeah.
And then if they wait to 70, I think it goes up to like 15 or 16,000,
That sounds right.
something like that. You can download the flyer, but
It's in that range.
it's a really good flyer, really straightforward
Oh,
and
yeah.
easy to understand. So, any other thoughts on the guaranteed income?
Nope, that's about it. Every now and then you'll see someone
Mm.
with a bonus on the withdrawal base. That's what Global Atlantic uses. That's how they're typically so strong. They have a 20% bonus on that, but there's really nothing
Man,
special
everybody
on this.
asked me about this 222 annuity, and that's like such a narrow thing because you have to take the money out, or you can only take the money out after 10 years. So I find that a little wacky. But anyways, that's a whole different subject. Income in 3 to 5 years. I still think F and G's right there.
F&G,
Chris can attest better.
absolutely. F&G is the strongest one from what I've seen.
And again, that's going down to like B plus rated companies, I assume.
Correct.
Yeah, so it's
You'll get like a Sagicor in there or things like that, but F&G, as far as A rated or anywhere near there, that's definitely the top option.
yeah, they're really aggressive in that guaranteed income space. Extremely aggressive.
Yeah.
All right. Accumulation FIAs.
Accumulation. What's next, Matt?
Accumulation
I
FIA.
think we might actually get to your RCA now.
All right. Oh, the first one. All
Yep.
right. So everybody, when you talk about FIAs, complains about cap rates
Correct.
or renewal rates, I should say. So Lincoln, I think they just came out with this. Maybe they've had it out, but this is a really strong offering with their cap lock on the S&P 500.
Mm-hmm.
And on the 10-year, it's 8.05.
Yeah.
So basically, so you understand, you choose the 10-year product, the cap is guaranteed at 8.05 for the 10-year period.
Correct.
And they even do that on the 5-year and the 7-year, right?
Yeah.
So it's lower on those, but not
Yeah.
by much.
Not by much.
It's 7.5 on the 5-year and 8% on the 7-year. So I mean
That's
that
strong.
yeah, and I'm guessing that you can transfer into that. Maybe you have to stay in that the whole time, but still, that's a really good deal.
A guaranteed cap of 8, that's very strong.
I mean, you might as well take that.
Yeah.
Um, so that's cool. And then you have the RCA. So again, these are kind of combating that. Oh, they always drop their caps. Well, okay, guaranteed 8% cap.
Mhm.
All right, I'll take that all day long.
Exactly.
So, I mean, that's going to have good performance. Now, I don't know if we're going to talk about the 60% par rate on the S&P.
We will get there.
All right, we're going to get to that. Now, go the RCA.
Maddie, you wanna advance the slide?
You want to talk about the RCA first? Oh, this is the
That's
RCA.
what this is in
Dang,
reference
Chris.
to. Come on, Jordan, it's like you didn't even look at this PowerPoint.
I didn't. You're the one who put it together. All right, let's see.
All right, so the RCA, the way that it works is it's based off the S&P Dynamic Intraday 1 year.
All right, what do you know what that means? Because I don't exactly understand that. It's basically the S&P 500.
It's basically the S&P 500. There's a little bit of vol control thrown in there. On one of these later slides,
We'll get back to that question. Continue on with what you're saying.
yeah. So with one of the later slides, we'll actually have the historical returns for the actual intraday itself. But basically what I wanted to show here is with the intraday, you can have an enhanced trigger basically. So the standard product, any year that it returns 0%, you're getting 7.55%.
So the RCA is a trigger product,
Mm-hmm.
and the triggers, because we're talking about it in the guaranteed cap section, I'm assuming the triggers are guaranteed for the life of the contract.
Correct.
All right, so the trigger rate, whatever you're about to read, that cannot change.
Correct.
All right, go on.
That is set in stone. So floor of 0 on this, trigger threshold on the base RCA is also 0.
Okay.
So if the intraday hits 0 or is positive, you are getting 7.55%.
And is that in the what year product?
That would be in the 5 and the 7 year.
Okay.
In the 10 year, you're getting 7.8%.
And they do have a 20.
They do have a 20, which is also 7.8. So
I wonder how many 20s they've actually sold.
I highly doubt many.
So, all right, let me get this straight. On the base level, if the intraday, which all those greens are positive by at least $1,
Correct.
if during that segment is positive at least $1, you get 7.8.
Exactly.
Guaranteed.
Guaranteed.
Okay.
Even if it's 2%, you're getting 7.8%.
If it's 25, 7.8.
7.8.
If it's -1, 0.
0.
Got
Yep.
it. Got it.
Also, they have the enhanced trigger. So this one, if it returns 5%, you'll get 9.5% on the 5 and the 7, or 10% on the 10 year.
10% on the 10-year. Okay, that's not bad.
So,
But it has to do at least 5.
has to do at least 5. Which, if you look behind us here, this is the S&P going back to 1975, roughly. So the past 50 years. And if you look at all that green, 34, 35 times out of the past 50 years, it's hit 5% at least.
Wow. And only 11 times it's been negative.
Exactly.
So if you even if you look the past 5 years, you were positive.
4 of the past 5.
Yeah, that's a hell of a return.
Absolutely.
Especially if you did the enhanced one.
Exactly. I mean, if
Wow.
you just look at the past 5 years, that's 8% right there.
Yeah, we were talking with our guy Ronnie the other day, and he was saying most of the money goes in the base, the normal one,
Mm-hmm.
but it actually seems like the enhanced is probably a better deal.
Why wouldn't you? I mean, look.
Or at least blend it, maybe do a 50-50 blend.
Yeah.
Because 7.5, like if I don't hit on 10 years, if I don't hit 7 or 7.8, whatever it is, but if I get that 7 or 8 years, well, I should have just bought a MIGA.
Exactly.
But 10, if I hit 10, 7 out of the, or even 8 out of the 10 years,
Yeah.
that's a really good return. I can't do the math in my head, but it's probably close to 9%.
It's up there. It's like 8.5, 9.
Yeah. Yeah. Which, okay, that is an argument to do that over a multi-year guaranteed annuity.
Exactly.
That's really cool.
And these are all guaranteed caps.
Guaranteed trigger rates. Exactly. Yeah. That's really attractive. It's the way they have it set up is a little confusing, but when you break it down like that, it's like, okay, that makes a lot more sense than maybe an FIA with a cap that's somewhat flexible.
Exactly.
You know what I mean?
Yep.
So, well, is totally flexible. I mean, they could
They're all flexible.
drop it down.
Except
Now,
for that lock.
I will say one thing. Somebody the other day was complaining to me about how, oh, the FIA got out of surrender and they dropped the caps. And I've been thinking about that, and it's like, well, of course they did, because there's nothing holding that money to them. The next day, somebody could
You
pull
could move
all
it.
the money out, and they
Yeah.
have no hold over that in their portfolio. So they've got to take extremely short duration
Yeah.
investments.
Exactly.
So that makes sense. So if you're doing a really good job, you need to be reviewing these before they renew, and be ready to, especially on the accumulation side, to replace them when their surrenders go away, because the insurance company is basically expecting that.
Yeah.
I
That's what they're
mean,
planning on.
that's what they're planning on. So you should plan on that with your client, unless it's an income product.
Correct.
All right. That's really cool. I don't know why people aren't doing a ton of that.
That's a very cool product.
Yeah,
For
that
sure.
is. American Nationals, and they came out with that. Was that beginning of this year, or was that last year?
That was end of last year.
It was end of last year.
Yes.
That's right. All right, what do we got next, Chris?
Sure. What's the question?
Yeah. Oh, it that just means that the cap. Okay, the question is guaranteed 8.5. Talking about the Lincoln product. Well, what we're saying is the cap is guaranteed to stay at 8%. And it was actually 8.05. So eight whatever, I don't know, 850 basis, or 805 basis points. So yeah, that's not a guaranteed return. It's just that the cap on the S&P 500 is guaranteed to stay at that level. So, do you want to continue to the next slide?
Yeah. Next up, I think we have the OptiBlend.
Yes, the OptiBlend.
So we've already talked about this a little. You talked about the S&P cap, which you can get at 9.65%, or you can do that cap lock like we were just discussing for 8.05%. Another index that you can choose here is actually a par rate on the S&P.
On the S&P 500, okay.
Anything over 100,000, you can get a 60% participation rate
on the 10-year product.
On the 10-year product.
So 60% par rate on the S&P 500. So if the S&P does 20, you'll get 12.
Correct.
If it does 10, you'll get 6, 5, 3,
yep,
so forth.
Exactly.
So how does that perform in history? Because in my mind, I would want to say, all right, I'll just take, whatever, the 9.5 cap or something, or even the 8% cap.
Yeah.
But how does that, we've got this up here, how it performs. So let's look at that.
That's exactly what this is. So most recent 10-year period, over on the right-hand side there, annualized credit rate is 8.8%, basically.
Dang, if you got 8.8% with no risk.
Correct.
So that, I think, is exciting.
No floor, 8.8%.
I wonder what the S&P straight up did over the last 10 years. Probably higher than that.
It would be a little higher than that.
But still.
We've actually got that also on a later
Oh,
slide.
yeah, all right. Damn, Chris, you thought of everything. So 8.8%, but I always got to put this in perspective. That's with no risk to people. So that is really good. In fact, that's fantastic.
Yes.
So then the worst 10-year period was 6.1.
6.1 for their worst period.
That's still not bad at all.
That still beats
I mean,
your
that's really
MIGAs.
strong.
That's incredible.
Yeah. And then the highest is a little over 9,
Yeah,
which, you know, that's just not going to be that much variability because of, the histories basically.
exactly. And last 10 years for the S&P, it's 12.45%.
12.45. Okay. So, I mean, again, I'm losing 4% for zero risk.
Zero risk.
I think I'd make that trade all day long.
Yeah.
That's not a bad trade at all. And in fact, you've got since inception on the S&P 500 is only 7.5.
Mm-hmm.
So 7.5 over lifetime. I mean, now I guess you can't exactly say you're going to get that, but still, that's really strong.
I mean, in all recent history, it's been well exceeding that. So,
I mean, last 10 years have been
yeah,
killing it. And if you think the market's still going to go up, shit, blending some of this into your indexed annuity makes a lot of sense.
absolutely.
In fact, I was just sitting with an advisor and his client was saying, you know what, if I just got 7% every year, I'd be happy with that. I think
There
I
you
think
go.
we need to go back and show him this. I didn't even think about that. But anyways,
Yep,
great option. I agree.
absolutely.
So what else do we have on the accumulation side that's attractive? Or do you have more that you want to talk about with the Lincoln product?
No, that's all for the Lincoln product.
I think that's hot.
So these are just some cap rates. If you're not into participation rates, you're worried about those dropping, you have less fear about cap rates. These are some of the stronger cap rates on 10-year products. The Athene accumulator, that one's also on their 5 and 7 at 10.5%. The Symmetra product, that's on 5 and 7.
Scorebridge as well?
Corebridge is also on the 5 and 7 as well.
Yeah, that makes sense. So these are all, in case you can't see, highest is 10.5 at Athene. Second highest is Corebridge, and then it's Symmetra, and the Opti blend and so forth. So,
And if you look at the column to the right of that, it shows the return over the past 10 years. So even if you have a 10.5 cap, you're getting 7.1% versus that Opta blend we just looked at, you're getting 8.8.
so that just goes to show you how having uncapped is very profitable for the client.
Exactly.
That makes sense. That makes a lot of sense. I like that. Bonuses.
Yes.
Bonuses.
Bonuses have been hot this year for sure.
Bonuses. Let's talk about the bonuses. What do you got up there first? Charter plus 10.
So first one is the North American Charter Plus 10. That's exactly right.
Yeah, you kind of threw this one. You surprised me with this one, but I think you have a good reason.
This one's come up a couple times. I am not the biggest fan of this necessarily, but it is a product for sure.
So what does it have? It has a 12% bonus?
Correct. This one has a 12% bonus if you're doing over 75,000.
Okay, so
Anything under that, you're getting 10%. So
okay.
not a terrible bonus. With them, you actually have 7, if I'm doing the math there, 7 different participation rates or
Okay.
7 different indexes that you can choose.
So you can only do par rates. So like the S&P 500, 25%.
Exactly. 25% par rate.
Oh, geez.
Yeah,
That's not very strong.
exactly. And that's kind of the trade-off with a lot of these bonus products that you'll see. You have great bonuses on the front, but as far as the actual return that you'll see, not going to be great just based on those lower par rates, lower caps.
So the ones that are at like 100%, what's the return of those? Like you've got the dynamic global index, and then you've got multi-factor yield index in here.
Yep.
Oh, you got them right
So
here.
that dynamic global, since inception, actually has a negative return of about 1%.
Oh, damn, that's hot. So it was created in 2022, and every year since it was created, it was negative.
Correct.
Ugh, yikes. All right, well, throw that one out. What about the next one above that? Fidelity multi-factor.
Multi-factor,
0.0.
0.01%.
Year to date, it's up 1.3.
It's something, but you're only getting 100% as the par rate, so you're getting 1%.
All right, that's no good. What about the next one? Multi-asset risk control.
Oh, where's that one?
Oh, that's the Mark V.
Oh,
So that one's not bad. 3% since inception, 4% year to date. You got 100% par rate. That one's like that
that
one's
one's not
decent.
bad.
And then you got the Barclays and Goldman Sachs.
So the Barclays, you have 3.27 since inception, 1.66 since inception.
And last year and this year both negative.
Correct.
And same with the Goldman Sachs. Goldman Sachs is 11 basis points. Wow. Well, that just goes to show you, Chris, when you engineer an index to be low volatile and back test to target a certain rate of return, that doesn't mean it's going to work
Doesn't
going forward.
necessarily hit that rate of return going forward.
Now the S&P at 25%, I can't calculate what that would be, but obviously I guess it would be about uh, a little less than half of the 60% return.
Correct.
So it would be, somewhere around 4%, almost 5%. Probably about 4%, really.
We've got a 25% par rate, so it's closer to 3%.
Yeah, that sounds about right.
Yeah.
Wow. So don't expect much of a return on that one.
Don't expect much there.
So basically, you get your 20% or your 12%, and then that's that. All right. So we need to throw that one out.
Yep.
Next
one we have on here is going to be the Augustar product.
Augustar, Consolation, or whatever they're called nowadays.
Constellation or
all right. So they have a strange tiered bonus thing, right? So basically 21.
They just dropped it last week from 24.
So 21% if you do 100% vol control.
Correct.
Is it this one?
Yes, that's exactly right.
Yeah, it's got the night owl, right?
So with this, you have to choose just a 50-50 mix. Like you said, it has to be 100% vol control indexes, and you can choose at minimum 2 of them.
All right, what are the par rates on that? Do I have that?
I do not
That's all right.
believe so.
They were pretty standard, but it looks like, the only really good index that they have is the interday in here.
Correct.
And maybe the strategic dynamic index. Although that one just came out this year. How can we project that performance out?
Yeah. If you...
all of these came out this year.
Yeah.
Well, 2 of them.
2017, no, almost all 2025, 2023.
So really you're looking at the Mark V if you want any sort of history.
Correct.
And their par rate on the Mark V, I think, was under 100.
Yes.
Yeah, you're not getting much.
It's around 85, if I remember correctly.
The only 2 that are attractive is the interday and the Mark V out of those.
Exactly.
Yeah, you got to be real careful about that and do some back testing.
And
it's a big bonus, though.
That's right. It is a big bonus.
And it's no fee.
Yeah. But if you want a bigger bonus and you like the interday and the Mark V, the next carrier offers both of those.
Oh, well, okay. If you think those 2 are the best. All right.
Maddie. So here we go.
Uh-oh.
This is American National with their Smart Start Plus.
Smart Start Plus has a 14% bonus.
14% base bonus, or you can do a 20% bonus for a basically 1% fee.
95 basis points fee. Now, that fee does get you the liquidity, which I think is cool. So 10% free out, and that stacks to 20% if you don't use it, which I think is really cool. Furthermore, the name, if you want to explain the Smart Start before we go into it, I think that's really attractive.
The name of it?
Yeah, like the smart. What I mean by that is the feature
the
about
90-day window.
Yeah, the 90-day window.
There we go.
Yeah.
So they do have a 90-day best entry window, which means whenever you have the annuity, you've paid the premiums for the next 90 days, whatever the lowest point is among all of those indexes, that is the starting point.
I think that's really cool.
That is.
I mean, out of all the things that we talked about, I think that's a very interesting thing. And this one strategy that immediately comes to mind, besides just replacement, is
Mhm.
clients pissed off. They just lost, 10% in the market. Okay, well, let's put it in here. Let's get you back your
You're
loss,
Yep,
and we're gonna find the best starting point to re-enter the market over the next 90 days.
exactly.
Again, subject to caps and participation rates, which we have right here. But I like I like I I like that story. I think it's a great story. But continue on.
So, like we said, there is that best entry window with the Smart Start and the Smart Start Plus. There's three different allocation options that you can choose from. Typically, whenever we run these, we're going with a moderate allocation. And so what that looks like is 25% going into the S&P.
That has a 7% cap.
Correct.
So S&P 500 7% cap, 14% bonus, or 20% bonus.
Correct.
Strong.
Yep. S&P Mark 5,
Par rate
10% going into that.
par rate on that is 70. So, it's like a 2% since inception, but
Yep, it's something.
it's something.
S&P Dynamic Intraday, 10% going into that.
Interday is 40%.
Mm-hmm. So you're getting
That ain't bad.
4%.
Yeah, that's not bad with a 14% bonus.
Absolutely. Morningstar Global Wide Moat, 30% is allocated in that.
That'll be a 70% par rate and 5%. So that's again closer to 4. That's not bad.
3.8.
Now it has hit the crapper year to date, but that one's brand new.
That's why you have a 90-day window. Hope it turns around.
Oh, that's funny.
And then the QQQ Portfolio Plus,
50% par rate.
which is 25% allocation into that.
And the QQQ is
2.3% since inception.
Yeah, and that one's pretty new as well.
Yeah. That one and the Morningstar Global Moat just came out earlier this year.
Yeah, look at that back tested performance. I cannot trust any of this back tested performance.
Yeah.
I think the big story is that you can allocate to the 7% cap.
Mm-hmm.
Now, if I wanted to do it all in that cap, the S&P 500 cap, it does drop the cap to 5.5.
Correct.
But that's not terrible.
Yeah.
I mean, if I want to do a custom allocation, I could allocate that amount to it, and that's not bad with that big of a bonus.
And if you did not want the bonus and you just wanted the original Start Smart or Smart Start, that one you can do a custom allocation and it's 8.5%.
I like that.
Yeah,
That's almost that's almost a better story.
exactly. No bonus. You're putting everything in. You get an 8.5 cap.
If I want to allocate 100% to the S&P. Now, if I choose that same moderate allocation, gets up to 11.5. So
Yeah.
Smart Start without the bonus, we've done a lot of bonus for replacements. It's attractive, but Smart Start without the bonus, doing that moderate allocation, that might be actually a really good choice for
That's
a
a
lot of
good
people.
story.
Yeah, especially with the entry window.
Yep.
And the fact that you can get out of that and go to the 8.5 cap if you wanted to.
Yes.
You can go all in on that. If it doesn't work out with the moat or the QQQ, those do what, they don't do what they're expected to do or whatever. Then you could always flip it over to that. And then at least you have an 8.5 cap, which again, really isn't bad.
Yep.
Furthermore, this gives you an excuse to talk to your client every year.
Yeah.
Which
That's
only
always
good
a good
things
thing.
happens when you talk to your client. I like this. Now, I guess while we're on the topic of American National, I don't mean this to be an American National commercial, but American National, as a lot of people know, got out of the life insurance business recently. They went full in on accumulation annuities.
Yes, they did.
And I think the benefit to that is they're improving their products dramatically. But if you go back and you look at their other indexed annuity, their strategy indexed annuity, they have, number one, it's flexible premium, but they also have a 7-year with an 11% bonus.
Correct.
I think people are sleeping on this product. and the cap on it is still 6.15.
Yeah,
So don't forget about it. I mean, it does pay. Um, I can find out about that. The question was, do they cater to Roth conversions? I can get some more information on the details of that. Uh, but the 7 year with the 11% bonus and 6.15 cap, that's strong.
that's competitive.
Furthermore, this does allow for flexible premiums, and the 10-year version only has the 1% bonus. But what I like is the 20% allocation of the S&P with the 12% cap.
Exactly.
12% cap on that thing. Normal cap is 8, but I can also do that on the NASDAQ.
Correct.
So don't sleep on the old 10-year product that they have, because I think it's still got some benefits, especially the 7-year for replacements. A 6.15 cap is pretty dang good with an 11% bonus.
Yes.
That blows
American.
yeah, it blows North American out of the water, I'll tell you what.
And you did mention this one has flex premiums. I will just specify that premium enhancement is only year one. So
Yes.
anything received year one would get the bonus. Anything after that, as far as flexible premiums, would not.
Leave it to Chris to get the details.
Someone's got to make sure we don't get sued, right?
um, I guess bottom line this, I think there's a lot of options out there. I think it's way deeper than just, okay, what's the highest cap and what's the back tested performance.
Exactly.
If you're looking at just ledgers and saying, well, my million grows to 1.5 million here and only 1.2 million here, you're not really getting the full picture.
Yeah.
I think you really got to take a step back and think about it. And, you know, we were looking on one of the softwares. I won't call it out by name, but they didn't even have the allocations for Anico. They
Yeah.
were only doing the custom versions, and the returns look like crap because of that.
Yeah.
If you actually had the custom allocations in there, it would look a lot better. So again, I think these tools that are out there are really great, but sometimes it tends to make
It kind of favors certain things.
exactly. And the insurance companies know what it's going to favor. And some companies make mistakes and they don't, have it favoring the right things.
Absolutely.
So I guess I'm just trying to say, just because company A happens to show like a 12% ROR over the last 20 years, you might not want to do company A, because that could be a vault control that was invented 2 weeks ago.
Exactly.
So any other thoughts, Chris?
No, that's pretty much all that I had.
Well, unlike Ken Fisher, I'm open to selling an annuity, and I will not die and go to hell before I sell an annuity. So anyways, thanks, Chris.
Yeah.
Thanks everybody. The download, we're going to include, I don't even know what I said we're going to include. I'll include the top MIGA rates. I'll include, something else. The rate sheets, and feel free to download those. We'll keep them up to date in case you come across this in the next couple months. Have a great day, everybody.
Yep.
Thanks,
Thank
Chris.
y'all.